the global banking system is facing yet another crisis. This time, it's centered around bonds known as Additional Tier 1, AT1, bank debt. These bonds were introduced after the 2008 financial crisis to help increase the safety buffers of banks and reduce the too big to fail risk. But this week, those bonds are at the center of a major controversy. The Swiss government last week brokered a deal between larger rival UBS and Credit Suisse. As part of the takeover deal, all AT1 bonds on Credit Suisse were wiped out, meaning bondholders who owned around $17 billion worth of these bonds lost their entire investment. And now, other banks are worried. AT1 bonds are worth more than $275 billion on the market. Investors are going into panic, wondering if bondholders at other banks will suffer the same fate as Credit Suisse's did. So what are AT1 bonds? These are hybrid bonds, designed to convert into equity when a lender runs into trouble. Essentially, they serve as an emergency shock absorber when a bank needs to absorb potential losses. But the problem in the Credit Suisse takeover deal is that bondholders expected to be paid out before shareholders if the bank went bankrupt. Unlike in other cases, in the Credit Suisse deal, investigators chose to pay shareholders first before those owning the AT1 bonds. This decision has sparked outrage in the markets, as now investors are left wondering if they could have the same thing happen to their own investments. In an attempt to ease the panic, European banking regulators have issued statements saying AT1 debt holders will only face losses after shareholders. But this assurance is too little, too late for many investors. Nobody knows what will happen next. Will bondholders at other banks suffer the same fate of Credit Suisse's bondholders? Will the AT1 bonds market be forever affected? Will investors return to buying them, and how will the banks react? Only time will tell. But for now, the banking system is left in an uncertain and chaotic situation. The only thing investors can do is be extra cautious and keep an eye out for more news to come.